Hi folks, Lee Gettess here with the Market Sense for the week of July 24th, 2018. As always, the charts in this presentation are provided to us by Gettess and their Trade Navigator software. And we're looking at a weekly bond market chart here where they've shown a fair amount of weakness lately. Nothing to get too upset about as far as I'm concerned. We were kind of looking at perhaps the 143.20 area being support this week. Last week broke down out of an inside bar, so it's not too surprising to have some continuation, but 43.20 should have been support. They've gone quite a bit through that, which, was largely because of problems in the Japanese government bonds and debt instruments all over the world kind of dumped in sympathy. Don't like moves that occur for obvious reasons like that, especially when it's not really the U.S. bond market that created it. So if you look at the lows here, these two lows are around 142, so a little 10-tick range here, 142 even to 141.20. As long as they don't break below that, I think they'll just bounce and turn back up again. Where they are here is really just in the middle of where they've been since February. No real damage done. And we kind of looked at the resistance, if they were going to continue down, was around 144.16, and they haven't even been to that, so that's certainly a sign of weakness. But it wouldn't be too surprising if they turn back up this week even. And I really think this should be close to the end of this, and they'll turn back up from here. Of course, if they don't, we'll deal with that. But at this point, this doesn't look as serious to me as the chart might indicate. Looking at stocks, we have what appears to be a relatively positive market, but there's some things that bother me here too. We were looking for a potential breakout above 28.20 last week. They did not do that, and they created this little weekly bar where the open and the close are about the same. Now, if this was a candlestick, they'd call it doji. I don't see anything different in candlesticks than I see in regular bars, but they do have cool names for stuff. And a doji bar, anyway, is, a breakout of that is meaningful. So we're sort of in the same situation this week. Going above 28.20 could be important. But they seem to have gone above that and not really shown much of any follow-through so far. And I have to say that doesn't surprise me a whole lot. And let me try to explain why. Since this low back here, I think that was early April, you can count either 3 or 4, depending on whether this is one big swing or you count it as, well, the first swing up is 1. And then it's either 2 and 3, or this whole thing is 2, and then this is the third swing. Either way, this is 3 or 4 swings up within a big sideways pattern. And it's not that the market can't move 7, 8, or 9 swings. It certainly can. But oftentimes they reverse in about 3 or maybe as many as 5 swings. That's about enough till they get a reversal. And 80% of all breakouts are false. Anyway, the problem is when they're not false, you either got them or you missed them because they just blow out of there. This, because of the way they traded on Tuesday, doesn't look like a blowout, so it wouldn't surprise me if this turns back down again and at least tries to go lower first. Of course, if it can't, then maybe we're due for another swing. But at this point, again, I'm not real excited about this, but they are flirting with a breakout here. So if they do continue to trade above 28.20, then we've got the Keltner channel up here and the high for the year up here around 28, both of them over 28.80. That would be the obvious target for them to get to. If not, we're looking at 27.80 here or 27.50 down at the lower moving average that they could still get to this week. And that wouldn't be horrible. Nothing about that would look ugly at all. So basically we have the potential for a breakout here, but it's sketchy and I'm not real excited about it. So that's what we've got for you today. I hope you can find something profitable to get yourself involved with.